Let's talk about Waaree Energies. It made a very, very strong debut today, listing at a premium of 60% to its issue price. We have with us Mr. Amit, who is the CEO, as well as Ms. Sonal Shrivastava, who is the CFO of the company. Good morning, ladies and gentlemen, and congratulations first to you, your entire team. It's been a long journey. You all have been pursuing this, and your shareholders would be quite happy looking at the screen today. But as promised in the, at the time when the IPO opened up, on listing, we are going to try to push you a little bit for numbers. So let's get straight to that. Now, the market capitalization on listing is closer on 68,000 crores. And if I look at it on your EBITDA parameter, you're going at a run rate of around 550 crores. You're talking about backward integration as well. So let's get that number out of the way. What can margins scale to, given that backward integration is coming on stream? Currently, you're doing around 16%. For FY25, FY26, where does this number head to?
So great. Thank you very much for having us. Yes, great listing. Thank you very much to all the investors who have reposed their faith on us. We will, as you rightly said, Nigel, we have backward integration in our plans, and the backward integration gives the fillip, number one, to margins, as well as, of course, to the supply chain resiliency. So in terms of numbers, I would say we are looking at easily around 200 to 300 basis points, but I'll give it to Sonal to comment on the numbers a little bit.
Sonal, please take it away.
As I said last time, yes, Nigel, like I mentioned last time, we have been growing our margins, and now we stand at 15% thereof. In the next 2 years, of course, we see it evolve at a higher level. It's difficult for me to, give you a number. I'm in silent period also now, Nigel. But more you will hear from us on this. But clearly, I think whatever capital we put out there, the return on capital and which margins drive that, that focus will continue.
All right, let's try to press you a little bit more on this. And in the silent period, Sonal, and going by regulations as well, we don't want to know anything in the near term. But we want to know, with that backward integration, I think Amit briefly mentioned that maybe it could be 200 basis points odd.
Yeah.
Given that scenario, should we be in the vicinity of closer around 18% margins, say in the next 2 years, 18 to 20%? Should we be working with that? Because volumes will pick up. That will be operating leverage will play out as well, and backward integration as well. So given the levers in place, should 18% plus margins be achievable for FY26?
So let's like Sonal said, Nigel, we are in the blackout period. Far out into the future, the margin territories will look very, very solid, both from the perspective of backward integration as well as the demand. Demand is extremely robust. The policy framework is definitely helping. So all of that taken together, we are looking at robust margins going forward. And in the territories that you mentioned, that could potentially be ballpark numbers that we could look at.
Amit, Sonal, good morning. Thank you so much for joining in. Congratulations on a very solid listing on the street. And since you mentioned robust demand, Amit, what's the ordering activity been on ground? And if you could tell us, what is your order win rate in the tenders that you are currently participating in and that you look to participate in the future as well?
A great question. So demand is extremely robust in the two market segments that we operate in. Two important market segments for us are India and the United States. Demand is robust on both sides. We talked about 16.67 gigawatts of order book. It keeps growing as we keep sitting here right now. And the mix is also very robust, where there is a fair bit of orders, export orders, and a fair bit of orders within India as well. So the mix is good, and the demand continues to be robust. There are several schemes, PM Surya Ghar Yojana, which helps us out. PM Kusum scheme, which helps us out as far as India is concerned. In the United States, having a manufacturing facility is a big plus, because then we are able to cater to the domestic content requirements of the United States. So overall, a very, very strong situation to be in.
Okay, all right. What about the competitive intensity inputs as well have coming in there. You have larger players that are competing in this space as well. Do you think the pie is big enough, everyone can nibble, and that import substitution will be good enough for everyone to prosper? Your take on the industry?
Excellent question. As you rightly said, there is competition, and competition is actually coming in because there is a huge demand. And you nailed it right when you said, is the pie big enough? Definitely the pie is at this point in time fairly big. India itself, we are looking at 500 gigawatts of renewable energy that we need to get to by 2030, and that does not include the increased requirement that is going to come out of data centers, that is going to come out of hydrogen. And so if you plug that in, it is conservatively at least 100 gigawatts above that. And that translates to a very, very robust year-on-year demand on solar. Therefore, at this point in time, a fairly good size pie for everybody to, well, I would say not exactly nibble. We would like to have larger pieces of the pie as well. But yeah, it's a good situation again to be in from a demand perspective. And competition and demand-supply situation.
All right, Amit, the final question before we let you go. And, this is again directionally, either Sonal or you could take it. But, I'm looking at your EBITDA trend. Almost every year it doubles. Last year, I think it was around 1,500 crores. This year, you're already doing 550 crores in the first quarter. Do we expect the EBITDA number, say, by FY26 to be closer to that vicinity of, say, around 4,500 to 5,000 crores? Is that a possibility? Because you're already running a run rate of close to around 2,500 crores for this year itself, which could even be better. So should we work with a number north of 4,000 crores?
So we will let you work on the numbers, Nigel. But what I want to bring on table is that, our US operation is going to go live. The backward expansion of the cell will come in place very quickly, and that helps costs. The PLI-related expansion, the module will come in early, so we will see some benefits in 26 as well. So from here, when I'm looking at my capacity, which currently is 13.3, this is going to go up to, around 15 and a little bit more than that. So yes, we can look at some expansion, some good expansion on the EBITDA level as well.
All right, Amit, Sonal, many congratulations on your listing and thank you for joining in today. Wish you good luck for the rest of the year as well. Looking forward to chatting with you more on this forum. Take a short break. The management of Tex Macro Rail joins us on the other side.